Hey everyone, welcome back to the channel, where's the best place to learn about Canadian finance. For this week, what I want to talk about is mortgage deferral. Originally, I wasn't planning to talk about this because I figured people were deferring since they need the money, and it really doesn't matter what's going on with the mortgage deferral, the terms and conditions, etc. They need the money anyway, so they should defer first and deal with the consequence later. But as months went on, I began to realize that a lot of people were deferring and they thought this was kind of like a free money they could take advantage of from the bank. And they don't fully understand the terms and conditions involved with these kind of deferral programs. And I've been seeing some posts saying that a lot of people are starting to get caught by surprise when their bank are coming back to them with the new payment schedule.
Oh boy!
So as we head towards the end of the deferral period, I want to make sure everyone who have deferred their mortgage fully understand what they're about to go through, and I want to provide some possible solution they can think about. So without further ado, let's jump into today's video. Now, first of all, I want to make it clear that mortgage deferral is actually nothing new. Anyone who have a mortgage currently are already being offered a deferral before COVID happened. What's actually new is right now we're being offered a 6 months deferral program. So this was never done before, and this is where a lot of people screw themselves over by putting themselves into a mortgage deferral program for 6 months when they don't have the need for one. So first of all, let's talk about how does mortgage deferral work. When you defer your mortgage, you're actually skipping the payment. However, inside the payments, there are two things you're not skipping. They're still counting. Number one is the interest that you were supposed to pay every month. This is the profit that the bank is supposed to make. This part is not being skipped over. It's still going to be counted every month, and because you have deferred your payment, they're going to take this interest amount, add it on top of your mortgage, and calculate interest that way. So essentially, the interest you have deferred every month is being compounded on top with more interest calculation. This is something that the banks make very clear in the FAQ when you're thinking about deferring your mortgage. And number two is your amortization, the number of years left in your mortgage. That clock is still counting even though you have skipped some months of payment. So this is where a lot of people run into problems. You have your mortgage owing amount originally, plus the interest on top, so now your owing amount is bigger, and your amortization is shortened by 6 months already, it kept going, and now they pay off the whole thing within this new shorter timeline. This is why people will start to see an increase in their payment from now on. So this increased payment can be very little or a lot depending on where you are right now with your mortgage. Let's look at an example. Now I'm going to be looking at an example from a Scotiabank website. This is the example they use on their mortgage deferral page. So in this example, they're saying if you are someone with $200K mortgage at a 3% rate, paying $1,379 right now, and you have 15 years left. You decided to defer for 6 months. At the end of 6 months, you now owe $202,981.40. With this new amount, plus you have 14 years and 6 months left since the 6 months have gone by, your new payment right now is $1,438. So you're paying $59 more than before the deferral. And this new payment is going to stick with you for the rest of your mortgage term, assuming the interest rate doesn't change. Now you might look at this example and you say, okay, well the increase is not really that much, it's only $59 per month. I think I can handle it. It might be still worthwhile to defer. While that might be true if you're in this kind of scenario, if I change the scenario up a little bit, the amount of payment you will see increase will be significantly more. Now, before we look at the next example, I would like to remind you guys two things. Number one is please help me like this video because this helps with the YouTube algorithm to promote to more Canadians so everyone can get the same information. Number two, we have a private group on Facebook where I'll be putting extra info and you can also ask questions in this group. So if you want to get more exclusive contents, make sure you request to join in the link below. So let's keep everything the same as the Scotia example, but instead of having 15 years left when you defer, let's say you only have 3 years left in your mortgage term. So here I'm using TD's mortgage calculator. If I put everything in, we can see that we got the amortization graph in the last example. We're still paying the exact same amount like before, $1,379. But if I mouse over the last 3 years, we'll see that we're actually owe about $47,000 left, and we have 3 more years to go. Now, if we defer our mortgage payment for 6 months, after the 6 months, with the exact same calculation according to TD's mortgage deferral calculator, everything is the same, but our monthly payment is now going to be $1,667 every month. Compared to before, that's an increase of $288, almost $300 every month.
No! God, please, no! No!
So really, depending on where you are on the mortgage years, you could get a slight increase in your remaining mortgage payments or a huge increase if you're very close to completing your mortgage payments. Now, other than the increased payment and the more interest you're letting the bank make off of you, there are also other downsides you have to consider when doing a mortgage deferral. Number one is the moment you defer, you consider you owe the banks money on top of the mortgage. You actually owe them an extra loan. And in order to protect themselves, they're going to put a lien on your house, meaning you can't do anything with your house financial-wise until you pay off the deferral amount back to them. So this is going to affect you because you can no longer refinance your house while you have a lien. What that means is when it's time to renew your mortgage, you can't shop around with other banks to try to get a better rate. And we all know that at renewal, your current bank, it's very likely not going to give you the best rate available because you're an existing client and you're less likely to shop around for rates. So if you really want to shop around, you can no longer do it because of a lien. And by getting a not so good rate with your bank, that means you have to pay more interest towards your bank compared to what you have to pay outside. That missed opportunity and the extra interest you have to pay because of taking a higher rate is the additional cost you have to add onto your mortgage deferral. So you're not just deferring your interest and letting the bank make extra interest. You're also giving up the opportunity to get a better rate in the future. So if you add those together, your total cost might be significant for the small amount of money you're deferring right now. Now, just a side note, one thing that you want to be careful is if your bank used to collect your property tax, you need to know that your property tax is still supposed to be paid to the bank even if you're deferring right now, because the property tax is government's thing and that has nothing to do with the bank. Because if you completely skip out on all the payments, the amount of tax you're owing to the government is going to be paid by the bank, and they're going to add that tax amount on top of your mortgage payment again. So your total cost just went up even more because you forgot to pay your property tax to the bank if that's what you used to do it. And the second last possible downside, this is one that I'm not too sure about, is if you're in BC, you could defer property tax if you have a child under 18 or if you and your spouse is over 55. I'm not sure if you can still defer any property tax right now if you have an existing lien from a bank on your house. So that could be another problem you run into if you were planning to defer your property tax and make use of the government's program. And finally, on the forum, I saw someone posted on Twitter saying that they were comparing different policies from the bank, and they're saying that some banks actually don't let you defer and spread your payment over your remaining terms of mortgage. Instead, they're going to do something called balloon payment, which means by the time you're done deferring, they want you to pay back all the deferred amount all at once. Now, personally, I don't think any bank right now is going to make someone do something like this because that's just bad PR and asking to put their client in a very bad position. However, regardless, I highly recommend you do the following steps. Number one is if you defer your mortgage payments, call your bank immediately and start discussing with them what does the payment plan look like once you're done deferring. Make sure you understand all the numbers and double confirm if it's a balloon payment, which I don't think it will be, or it's spread over the remaining terms of your mortgage. Number two, which is very important, with the new payments from your mortgage deferral ending, compare that with your existing cash flow scenario and make sure you have enough cash flow per month to handle this new payment that's coming up. If you were in the last example where you're paying an extra $400 increase once deferral is done, you might run into a serious cash flow problem. And if you're not ready, start thinking about solution how you can handle it, which I will talk about later in this video. Number three is make sure you know when your renewal date is. If you're 5 years away from renewal date, maybe you don't have to rush to handle the deferred mortgage payment yet because you still have many years away. But if you're 1 year or less than 1 year away, maybe you want to see what kind of rate you're getting from your bank versus what you're getting outside and see if the difference is big enough for it to be worthwhile to handle the deferred payments or pay everything back, just so potentially you can get a much better rate outside with other banks. That difference in saving could be a lot bigger than the amount you're trying to defer right now. Now, the last point is I highly recommend you work with an advisor, either privately or with a bank, to sit down with them and really go over the whole scenario. Make sure you're 100% prepared and ready to handle the new payment, and you can know how much buffer room you have left for yourself to play around with should your job or other things happen in your life. Okay, so let's talk about possible solution you can handle if you realize you have deferred your mortgage payment and you kind of regret the decision and you want to pay it back. Number one is on September 27, the Canada Recovery Benefit is going to roll out, and depending on what your income level is, you could get some or the full benefit of CRB without paying anything back. Regardless, one thing you can consider is if you're eligible for CRB and use the amount to prepay into the mortgage deferral to get that out of the way first, so you can go back to the original payment plan. If you want to pay back and you're really lacking cash flow, then that's something you can consider. Other things you can look at is potentially using a line of credit or a loan to pay off the mortgage deferral if you really wanted to pay it off. This one is going to be a lot more riskier. You need to talk to an advisor to really figure out the cost benefit, see which one is more worthwhile for yourself. And then one last resort I want to bring out to consider is, depending on your situation, you need to see and think about if it's beneficial to try to sell your home right now before mortgage deferral or other benefit programs stop, especially if your current work is being affected. Right now, the real estate market is still hot. So if you're trying to sell your property, likely you can sell it fast and get a pretty good price on it. It's way better than just trying to hold on to your house, knowing that you don't have the cash flow to do so, and then sooner or later, you get foreclosed on your home. If that happens, you'll likely lose your deposit plus all the equity you've paid into the house for all these years. Now, obviously, this is a last resort and an extreme option, but I just want to bring it out there for someone in a really bad position right now. If you know someone around you that's deferring a mortgage right now, make sure you send this to them so they are also aware what's going to happen once the deferral stops. So what do you think about this 6 months deferral program? Do you think it's going to help people or it's going to do more harm than good? Let me know in the comment below. Also, if you like these kind of videos, I do post them every Tuesday, 8:30 EST. Make sure you comment, like, and subscribe to my channel and click the bell button so you get all the notifications in the future. Alright, this is Jacky. I hope you found this interesting. I'll see you next Tuesday. Bye!